Alright, traders, a very good evening to you all. This is Avilar from the Tradepsyche, and I welcome you all to the post market analysis, outlook, and expectations from the market for tomorrow. Alright, so today was Nifty's expiry. Tomorrow will be Wednesday. So, in this video, we'll analyze Nifty and Bank Nifty for tomorrow. What will be some of the crucial levels? What will be the supports and resistances, and what discussions we had in our yesterday's analysis video, and what discussion we had in our Telegram group. Right. So, at the end of this video, we'll also look at the OI data, that what is the change in OI data and what bias we can form for tomorrow. All right. So let's start the discussion. So first we'll go to the Telegram group. Right. So today, right, we discussed uh, when the markets opened. I think we mentioned that we can open 90 to 100 points gap up. We roughly opened around 50-60 points gap up, and then I think we retraced that gap up completely. If you see, roughly somewhere we opened at this green zone which we had marked. Let me remove all these levels. Right, so we opened roughly around, I think, 23,500. Since 23,500 we discussed that it can be a resistance. So I've always mentioned that if at all we are opening at a resistance, the markets have a very good probability to give you a resistance. So 23,500 was a resistance. This green zone which you are seeing was earlier a resistance zone, right? So we opened at the resistance and market gave a pullback till 23,350, right? And which was roughly yesterday's swing low. So technically markets came down till that swing low and we made a bottom, right? Then we discussed that more number of longs can be seen today. Major support zone is 23,300, 23,400 zone. So exactly, if you see, markets took today support multiple times at 23,300 and 400, and then we broke out of 23,500. Right, post that we discussed that total OI major resistance is at 23,500 for today's expiry. Major support is at 23,000. At the money is very near to 23,500. So the more, I think, the nearer we are to any resistance zone, I think the probability of breaking that resistance zone is higher. Right, we mentioned that keeping the stances bullish. Then we mentioned that FI's index future positioning. FIs have unwinded some shorts yesterday. Still we cannot say, as this is just only 1 day's data. We need back-to-back shorts unwinding. Then we can say that yes, FIs are bullish. We mentioned that bearish stance as of now. Then we mentioned participants OI data. Focus here. Clients, they were expecting a sell on rise market. FIs were purely bullish and pros were purely bearish. So as retailers are mostly bearish and FIs have a bullish stance, we can expect buy and dips market. Pros are short. It means that they can sell from higher levels, but they are not aggressive bearish. So small dip can come between the markets. Isn't it exactly what happened? We opened, I think, gap up. We came down because it was a resistance zone, right? And then we took support from 23,300, 400 zone. We broke that resistance zone of 23,500, but it could not be sustained. Right, then this pros dip came, which we talked about in the OI data, right? That small pros dip came, and then once we again hit, this was the only third hit. Once we again hit this zone, I think at that point of time markets took a beautiful support at this point of time from this 23,300 zone, right? If you see that we before the market started, we had this 23,600 zone as the red zone, and even this 23,500 zone as the red zone before the market started. So we convert, the moment we broke out, we converted this red zone into green zone. And if you see, after the breakout at around roughly 1 o'clock, we broke out, we took support from this support zone which was earlier resistance zone, and we broke out, right? Then we discussed the game plan, that above any move above 23,500 can take us to 23,650, 700. So any bullish entries will be made above it. For shorts, we have to breach this green zone. This green zone which we had marked, which was roughly around 140. This big green zone, we mentioned that only and only bearishness will come below this zone, right? Then we also mentioned that today's Nifty 50 is expiry. IV is too high, right? Then the moment, I think roughly around 940, we mentioned somewhat bullish view, and I mentioned that the moment we'll break out of 23,500, we'll go long, but we wanted the markets to sustain. The markets sustained even for 1 hour, but I think the next hourly candlestick uh, market was making slightly as bearish. But if you see, I always mention that the prior swing low, until and unless any prior swing low is breached. So what was the prior swing low? This was the prior swing low. So markets came till this swing low, but it did not break. We took support from this prior swing low itself, and then we started to move up. So understand the price action, right? Remember this. Let's suppose I'll try to make you understand. Let's suppose markets are moving like this, like this, like this. So these are the prior swing lows. So unless and until markets are breaching this prior swing low, don't short the market. And even if market is breaching, wait for the breach and retest. Because sometimes what happens is we even breach this, but if at all we are again going and sustaining above it, that shorts which got triggered here, they hit the SL. So wait for the breach and retest. If at all you see markets coming down again, short somewhere here, keep a SL here, and then trail till here, and below it you can trail like this. Getting my point? So remember this every time, that unless and until any swing high or swing low, prior swing high or prior swing low, if it's not being taken out, I think the markets will be in that same trend. Right, then I think we mentioned that today Nifty has exactly taken resistance from daily 5 EMA, so that we will see on the charts. And last one, ROI, aggressive addition of shorts. So at this point of time, this was roughly the time when pros dip came. This was the time, so we saw aggressive shorts addition, right? And at the same point of time, I think some news might have come. Crude spiked and the dollar index spiked. So we mentioned that yes, shorts have been added, but unless and until this green zone, which was support 23,350, unless we mentioned this green zone is the last swing which Nifty made on the downside. If this gets breached, then we can straight go to the lower green zone, but this never got breached, right? Nifty OI chain we discussed, 23,500 has huge CUI and 400 has huge PUI. The markets can expire within this range. Then we mentioned that if we manage to cross 300, 23,500 and sustain, then we can see a very big move. Then we also mentioned, hope we all learn some price action here today. Unless the prices break prior swing low, don't initiate any shorts. So we mentioned that the next swing high was roughly around 23,600. The moment we broke, I think today 23,600, we went till 23,650, and we exactly took the resistance from the next resistance zone, which is the zone of 650, 700. So this is what happened in today's market, and this is what we had discussed in our Telegram group. Let's start the analysis. I'll clear out all the price action for tomorrow. All right, let's go to daily time frame. Now for daily time frame, there is a one major change today which has happened is, although I wanted the close to happen above daily 5 EMA, because if at all you see, last time we did the same, last week also, Monday and Tuesday we formed the same price action, but Wednesday was a clear bearish day because we were not able to close above daily 5 EMA. So this can happen, I think this week also we have a probability, because as a trader your business is to just analyze the probability. Don't try to predict the market, right? So the first probability which the markets have is tomorrow is make a price action like this. So the first sign, we will discuss this on the smaller time frames, that if the markets have to go bearish tomorrow, big time bearish, then what will be the trigger price for that point, right? So this, at this point of time, how the markets went bearish is, the moment this low, prior daily candlestick low was breached, I think we saw a good trending move on the downside. So same strategy we will apply here. We have prior daily low at 23,350, right? Below 23,350, if the market sustains for 15 or 30 minutes, I think we can see 23,120 and 23,000. If at all the markets again start to move like this, then I think we can see another major low at 22,500. So this move can be easily traded. We will discuss on the shorter time frames that how to trade this move. On the upside, since today we have closed above prior daily high, even though we closed above prior daily high, at this point of time also, still we turned around on Wednesday. So tomorrow I think the longs will only and only get triggered above 23,660. The way how we discussed in yesterday's analysis, that any move above 23,500 and sustaining can trigger a move till 23,600, right? We went long on the same perspective. The moment 23,500 got cleared today, I think we went long. The view for bullish entries was given, right? And we traded that move. So above 23,660 tomorrow, a clear cut move can come till 23,833. But a risk remains that unless and until we cross 5 DMA, we cannot say that we are ultimately bullish. So tomorrow one bullish trade can be formed at above 23,630, which is this one, right? We will again not forget the weekly analysis. What we did is the 50% retracement is this zone 23,750. Above this zone we discussed that we can easily do 24,200, 24,300, right? But we have to drill down on the smaller time frames in order to see that exactly how we can capture this move on the upside or on the downside. No trading range will be 23,350 and 23,660, right, which is the daily range of today, right? For tomorrow, right, any move above, I've already discussed 660, 670, you can take the market till 23,830 and you can eventually target 24,000, right? Why 24,000? Because 24,000 is a psychological round number level. The big players, the big traders, they have their position, they have their call sellers. The call sellers only trade, the big call sellers and the smart call sellers, they only trade at round number levels 23,500, 24,000, right? And apart from that, if you remember from the last weekly analysis video, we also discussed that we are moving in a broadening pattern, or we are moving in a channel like this, and the markets can essentially give a bounce back from the bottom of this channel. All right, so we are playing this move only. So we are anticipating a move like this, and roughly around 24,600, 24,500 can be an apt point to short the markets again, right? So we all know the levels, that above which level you have to go bullish tomorrow. Let's go to hourly time frame now. From hourly perspective, the 5 EMA has crossed, and the prices have also crossed above 5 EMA and 20 EMA. So the apt target for the market is to touch the hourly 50 EMA, which is 23,730, right? While we are discussing, this is one very important point to remember, that while we are discussing the shorter time frames, we can never forget the longer time frames, the higher time frames, right? So we have discussed that for the weekly analysis video. In the weekly analysis, we discussed that for the markets to give a good short covering, we need to go about 23,750, 700 till the markets capture 24,000. And we also discussed that positional longs will only and only come above either 25,000 or 24,500. Because up till now also, because even if you see, we came down, we gave a up move, we came down, we will give an up move. So how the markets will bottom out, if at all the markets might go till here, this we discussed yesterday also, we will make another low, and if at all we are making a bullish price action somewhere from at this point of time, like this double bottom or W pattern, then we can say, then yes, the markets are trying to bottom out. But as of now, this is just a purely a dead cat bounce, which the markets saw, I think, in the prior bounces. This was a dead cat bounce, this was a dead cat bounce, this can be also a dead cat bounce. All right, so on smaller time frames, how do we know that we are going to breach the prior daily low? See, from hourly time frame, if you see the inspection, we have 3 support zones today. One is 23,500, second is 23,400. If at all tomorrow on hourly time frame we breach 23,500, because 23,500 today we have formed a good support at 23,500. So if at all we are breaching 23,500 tomorrow and sustaining, so that will be the first sign that we might breach prior daily low, which is 23,350. So don't short the markets unless and until we breach 23,350, because once we do that, once we sustain, we still have a long way on the downside to capture. So don't be in a hurry. Just take the signs from the market, that what the markets are doing. Take the signs from the price. If the price is breaking 23,500, then it will be your first sign that yes, the markets are going to be bearish. So you have to be in your mind like you can try to make a bias that yes, 23,500 has broken down, I should get ready for shorts if 23,350 gets broken down and sustained. Where the problem comes is what traders generally do: the moment 23,500 breaks down, people enter into puts, and the markets they try to form a bottom again, because this is again a good support. What is the current good support in the market? 23,350, because at this point of time you can see 3 to 4 weeks of the market. So even if the markets come at till I think 23,350, we can make a W pattern. So unless and until we sustain an early candle below 23,350, don't even think of shorting the market. Getting my point? The current trend is definitely a buy on dips market, but it is for very short time as of now. As I always say, after a long rally, whether on the bearish side or bullish side, don't try to capture the first pullback. Let the markets come here, let the markets bottom out like this, then you can trade above this neckline for a move like this. This will be a double confirmation move, right? Because let's suppose you would have played for positionally or swing basis long, you would have been trapped here, you would have been trapped here, and you can be trapped here. It's a probability, right? So how to get double surety? Let the markets come down, let the markets form a W pattern, trade above this neckline. Simple. Just keep understanding the price, keep understanding that what level is being broken down, what level is being breached on the upside, right? Let's go to 15 minutes time frame and let's discuss now. From 15 minutes time frame, if you see the last two times we took a pullback from 15 minutes 100 EMA, but today we breached that, we took a support and we are trying to move up. So tomorrow, mark, I think if you are a moving averages player on 15 minutes time frame for intraday entries, mark this 100 EMA for 15 minutes time frame and keep trailing on the basis of that. We have already discussed that on what level of on what basis of levels we can actually do the bullish entries, right? One more important thing, we had a gap, this gap which got today filled, and exactly after covering this gap we took the resistance. So tomorrow, unless and until we cross back up again 23,660, don't even think to go long. Any early sustaining above 23,660 will be a good sign to go long in the market for tomorrow. Alright, about 23,660, target for 23,833, because that's what essentially we discussed yesterday, if you guys remember. Any move of 23,500, you can target 600, 650, and that's what happened today. So understand the market by breaking down the markets on smaller time frames. Alright traders, let's go for Bank Nifty. Bank Nifty also is trying to make a slightly dead cat bounce, but it has been a long bearish rally. Acha, one more thing I wanted to make you guys see. See, if you understand the price action from long time, we have been in a sell on rise from 26 starting. This gap happened because of the trade war, trade news. This down move happened because of the budget, and even after that we were in a strict down move. So we have been in a sell on rise from past, I think, 3 months now, right? And this is what exactly is being reflected on the monthly time frame also, right? So any move, so current monthly is 50% is 24, 200, 300. So that's what I'm saying. Any any positional bullish move will only come about 24,500 for 25,000 and for 26,300. That's it. Getting my point? This is on monthly time frame. This is a very higher time frame, but you need to remember the longer time frames as well. Alright traders, for Bank Nifty is doing the same approach. Mark the day high if at all, and apparently today's day high is Bank Nifty's 5 DMA. So if at all Bank Nifty tries to breach the level of 55,000, we can easily target 55,600 and 56,000 for tomorrow. Any shots, if at all they have to come in, Bank Nifty will come below 54,120 for 54,000 and for 53,000. Simple analysis. Alright, on smaller time frame, let's go to 15 minutes time frame. If at all, I think Bank Nifty is trying to make on lower time frame, trying to make a buy on dips pattern. The moment we cross prior daily high, you can go long, but we have a very strict resistance, because on 15 minutes time frame in this whole bearish rally we have never hit 15 minutes 200 EMA. So there is a probability that if at all tomorrow we might in Bank Nifty reach 200 EMA 15 minutes, we might take a resistance. So be careful whenever the Bank Nifty comes till 55 600 zone. All right, all these level, all these zones which I tell you, keep marking on your charts with red zones, green zones, how I mark, right? And for Nifty we'll discuss on the basis of opening how we can trade the market. See, if you see, these are small number of bulls in the market. If at all we are opening a gap down market, I will be looking for sell on rise opportunities tomorrow. Why? Because these bulls are weak. If at all any big gap down happens, these bulls will further get weakened and they will start to book their position. The moment they will start to book the positions, the markets, you can see the markets crippling now. If at all the markets are opening a big gap up, wait for the retest of this kind of thing to prior day high or prior daily close, then try to go long here. If the markets are opening flat, you know the drill. Wait for the prior daily high or prior daily low to get breached on either side. Same goes for Nifty Bank. But one important thing which has happened today is decline in India VIX, which is a good sign of complacency coming back into the system, fear going out of the system. So the VIX decay today, I think VIX slashed by 8%, and I think it has come below the level of 20, which is a good sign, roughly a good sign for the bulls, provided nothing negative should come from the market. All right, let's discuss the change in OI. The change in OI for next expiry is slightly higher number of longs in the market than shorts. Major support today has been added at 23,600 and 23,500. Next major resistance today, as per today, is 24,000. All right, so we have a good probability till moving till 23,800. 800 would be slightly resistive zone. If you discuss total open interest for 24th March, 500 and 400 has good support, but still in terms of total open interest at 23,600, the bears are stronger than bulls at 23,600. So if at all we are opening above 23,600, these bears will strictly exit and 23,600 will be converted into support. But if at all we are opening a gap down roughly below 23,500, I think we can expect a trending bearish days tomorrow, if only and if we are opening gap down. All right, so as per my analysis, the data is almost neutral with a slight bias on the bullish side. For Bank Nifty, I think the Bank Nifty's data is bullish. Yes, 4 lakh addition of longs, only 28,000 addition of shorts. So even Bank Nifty is planning for a more deeper pullback on the upside. Total open interest, still more number of longs remain in the system, but still 55,000 remains a sharp resistance. So that's what we discussed. Any move above 55,000 tomorrow can take us to 55,600. I hope you get that understanding. All right, we'll discuss something about gold, crude. Gold, as we discussed, that it is technically in a sell on rise pattern. Unless and until we close any price above prior daily high, don't try to get long. Maintain a sell on rise stands for gold, right? So for today, if gold tries to breach the level of 155, aim for 151 and 150. That's it. Bullish entries, I think safe bullish entries should only be made above 160. Above 160 you can target 163 and 165. Intraday bullish entries can be once targeted above 157 till 160. Crude was in a pure sell on rise mode till yesterday, but today it is purely buy and dips. So we have this trend line for crude, which is coming, supportive trend line which is coming from the bottom. If at all we are breaking this trend line on the downside, I think these zones can be targeted on the downside. Ultimate shorts will only come below 8,500, but if at all this green zone is being breached on the downside and getting sustained, this next green zone can be targeted because we have a gap being unfilled here. Getting my point? So this was the discussion for tomorrow's market. I hope you have got the clarity that how to trade. Overall, I think from OI data perspective also, I think data looks slightly bullish, and from price action perspective also, we are here for a slightly more deeper pullback on Nifty till I think 23,800, 2900 or maybe 24,000, right? On Bank Nifty, you can see a pullback till 55,600. But as we mentioned, 55,600 is a good EMA resistance zone. So be cautious at that point of time. All right. I hope you guys have liked the analysis. If you have been watching till this time, leave a like, leave a comment. Uh, Stay safe in the market. Cheers.